What's up, people? What's up? It's the Pip Magnet here. We back again with another one. I get a lot of people, actually newbies, people who actually don't know anything about the markets, people who are still new to this game, asking me a very important yet subtle question, which is, how do I spot support and resistance? Okay, how do I spot support and resistance? So basically what you're going to learn today in this video, we're going to go through what is support, we're going to go through what is resistance, we're going to go through how to find valid support, how to find valid resistance, then we're going to go to how to trade using support and resistance. Basically that's what I'm going to be showing you guys in this video today. Without further ado, let's jump right into it and let's get started. Well, okay, so now we're here in trading view, and this is volatility 25, as you can see right here. For those who don't know how to access trading view for deriv, I do have a video that I'm going to post. So let's get right into the video, guys. So as I said, we're going to be teaching you the simple steps of how to actually spot good support, good resistance, and what it is. So beginning with support, what is support, you ask? Okay, so guys, in trading, support, if you're a newbie, this should make sense. So support, picture it like a safety net for falling price, right? Imagine a ball bouncing on a trampoline. The trampoline represents the support level. When the ball, which is price, falls, it hits the trampoline, which is support level, and bounces back up. So I hope that makes more sense to you guys. And let me just give you a little bit of a definition and how it actually works. So basically, with the definition, support is the price level where a falling asset, like a stock or currency, stops dropping and starts to rise again. It's where buyers come in to buy the asset, preventing it from falling further. How it works, basically, when the price of an asset drops to the support level, it's like the ball hitting the trampoline. The demand for the asset increases because buyers think it's a good deal, so the price tends to bounce back up. So basically, this is just a simple explanation for what support is. With that explanation being said, let me see if I can make it make more sense. So basically, support, like that explanation was saying, if we look at it like a trampoline, trampolines are low, so they're at the bottom. So let me get a trend line so we can actually make this make sense. So you need a trend line. Let's get trend line right here. I mean our horizontal line, my bad. So anyway, there's our horizontal line, so it's the line we're going to be using for our support and resistance. So basically, support being a trampoline, it means it's at the bottom. So as you can see right there, that's a support level. Why am I marking this as a support level? Because it's at the bottom. So the market is touching right here at the bottom, it's touching right here at the bottom, it's touching right here at the bottom, and right there at the bottom. And this level that I mark right now is a very good level of support. Why do I say this? It's because the support has been tested quite a number of times. So as you can see in the past, this is the 24-hour chart, which is a daily chart. So as you can see in the past, the markets came to this point over here, the market then came again to this point over here, the market went up, came back down to that point over here, came back down, broke this again, came back down to this point over here, making this a very valid support in the long run. So basically, that's how you spot a support level, a valid support level. Because I mean, if we were just saying like it's the bottom, we can literally like, if support was just the bottom, then it wouldn't really make much sense, because then now you can just say, okay, this is a bottom, then you say that's support. Yes, it can be support, it could work as a support level, but it doesn't necessarily mean that just because it's a bottom that makes it a support, because you could literally have bottoms anywhere. Like right here, I can put this right here and say that's a bottom. Okay, this is also a good support level, because as you can see, it's been tested once, twice, 3 times. So I'm sure you're getting the gist now of how you spot good supports, because you see like here where I put it right there, that's a good support level, because you see it's been tested quite a number of times, and the market bounces from that level and makes a big movement from that level. So if you see a point where the market does make a really big movement from, and it's been tested at least two times, then you know that's a good support. That's a good point of support. But yeah, I will get into how to spot when the support is likely to be broken, you know, and violated. But right now I'm just trying to explain to you guys what support is. Let's see if we can find another pair. Okay, so let's say, for example, let's say V51 seconds. Okay, so this is V51 seconds. So first thing you want to do actually is you want to zoom out on your daily chart. You zoom out. With the chart being zoomed out, you can actually have a bigger picture, like an overview, so you can actually spot your support levels nicely. So yes, then we come here, we grab our horizontal line, and then there's an example I wanted to give in the previous here, but I really couldn't because I couldn't really find the bottom that was making that example make sense. So here's a good example. So you see this bottom right here. You can't just come and say, just because you're seeing this single bottom and then you say, okay, that's a support. Yes, it is a support level, but not really, because it's only been tested once. So we can't really say that's a strong support level. The market can easily come here and break this, because that doesn't really have, it doesn't have weight behind it. So but if you can look now at the other support level, so like for example, if you can come to the left side and we see right there, see right there, if you can see where the line is there, see the market tested here, the market then came and tested again here. Let me zoom in so you can see properly. So the market then came back and tested right here, the market came back again, tested here. So yeah, the support, for it to be a support point that's actually a good support point, it has to be tested at least twice. Twice is the minimum number. Then you can know, okay, we're working with something here. Understand? So I hope that makes sense. Support wise, I hope you guys understand what, you know, support is. I can actually give you guys another example. Let's check another chart and let's just see. We can get another example. Let's say, for example, V10 1 seconds. V10 1 seconds, still on the daily time frame. Just come right here. If you're using trading view, you grab your horizontal array. Bada bing, bada boom, bap. Okay, so now as you can see right now here, where the market is right now, this is a good support level where it is right now at the moment, because see, it came back to test that point, it tested it here, and it acted as a resistance as well here, and it also tested it here. If you can see, let me just zoom in so you guys can see better. Okay, so you can see the market tested this point here, the market tested the point, the support around this area, and it did test it around this area, and right now where it is currently, it's bounced off that support area, which makes it a very good support. So anyway, here's another support. Basically, like, the rule is easy. We just want to find a level that's clear, but that level has to be tested at least twice. See, that's another support level. It's been tested once, twice, 3 times, 4 times. Then here it did react when it got close to this point. So this is a support level. But when you get more advanced with it, there's actually areas. So there's support levels, then there's actually support areas. So these are actually areas and not levels. Okay, so basically what I'm trying to say is, like, when I'm saying it's an area, if I put it like this, then you can kind of get the gist that it's an area. So it's like an area where the market reacts to. As you can see here, it's not really like a line, because most people think it's a line, where it is a line in a way, but it's actually more of like an area. So as you can see, where I've drawn this area, this is like an area where the market has been reacting. So if we go back in the past, just in the near past, you can see that the market reacted here in this area, bounced, came back, reacted in this area, reacted again in this area, again in this area, again here, and again here, and as you can see, it reacted again in this area right here. That's support for you. And basically it's just the low, the trampoline. I'm hoping the trampoline analogy is making sense to people who are really new and don't understand. Now let's hop on to resistance. Okay, so let's just open a new chart. Let's just say V75, one of my favorites. So alright, with V75 here, what is resistance, guys? What is resistance? So in trading, resistance is like a ceiling that prevents prices from raising further. Imagine a ball bouncing up towards the ceiling. The ceiling represents the resistance level. When the ball, which is price, reaches the level, it tends to stop rising and may fall back down. So the basic science,
We are interrupting this program to deliver an urgent announcement to all citizens of Earth.
a ceiling. Now we're just going opposite from what we did with support. So that's basically resistance. This is the opposite. So now we're looking for the top with support. Support and resistance, you can't just come here and just mark that point and say, yeah, that's my resistance, I found my resistance goes to the top. No, that doesn't make sense, because now this so-called resistance of yours has only been touched once. Okay, you want it to be touched at least twice for you to say, okay, this is a valid point of resistance. All right, so let me give an example. Okay, so here's an example right there. Okay, as you can see, this resistance was touched there. As you can see, it was touched there. I know most of the people who are watching right now are gonna be like, oh, but that's not really a good touch. But actually, I'll show you right now what I mean when I say it's been touched there, and then it's been touched there. So what I mean when I say it's been touched there, let me see if I can mark that. If I can mark it, so we can kind of like, I can show you guys what I mean. Okay, so let's go down to a lower time frame. Man, this is just gonna drag. But let's go to a 4-hour time frame and let's find that tick. No, Nike, there's that tick. Here's our tick. All right, cool. Now we're gonna have a better look at it so you guys can actually understand that it is a point of resistance. As you can see right there, the market did come and it touched right there as a resistance, making it a ceiling. Failed to go up and the market shot to the bottom side. The market then traded, it didn't come to that point for a long time until it came again here, right here. As you can see, it touched this and it touched this right there and it shot to the downside. So basically that's what it is with resistance. Let's go back to our 1-day time frame. So basically that's what it is with resistance, just the opposite of support. Like what I was explaining, it's just basically, so it's just opposite. Now instead of looking for the bottom, they're looking for the top, they're looking for the ceilings. As you can see there, the market touched 1, 2, 3. You see the market touch, so that's a good resistance. It did break here, but as you can see, it did touch 1, 2, over 2 times, 3 times. As you can see, it attached also here. So yeah, we can even check. I can even give you guys another example, but I'm hoping it's making sense so far. Let's see, let's look for another chart. Let's look for the 100 volatility 100 index. Check that out. You can put a horizontal line anywhere. As you can see, there's a very good resistance level. As you can see, it's been touched multiple times. 1, 2, 3, 4, and it's most likely going to reject. As you can see, it's already rejecting here at this point, because it's like a good resistance area. Don't forget that it's an area, it's not like just a line, because most people, they get this confused. They just draw a line and they say, yeah, that's my resistance line, that's my support line, and then when things don't go well, they ask themselves, but what, I had found my support line, but how the hell did I lose? Like, I found my resistance line, but how the hell did I lose? Well, there's only one reason, because you thought it's a line. It's not a line, it's an area. So you see, there we go. If we can put it like that, then we can find the other area, the other top line for the area. So how do you find out the top line for the area? Basically, what you want to do, you want to find wicks. So for example, you see these wicks here, these wicks over here. You just want to find like a candle that you feel like, okay, it rejected in this area, then you just mark the close of the body, and then that's how you can get your area. If the wicks are inside that area, then you know that this is a valid area. So now when you're trading, you can really look to get your entries in this area, basically. So anyway, that's resistance for you guys. Let me just give you one more example. I don't know how to sing, guys, my bad. But anyway, we just find something. There we go. 325. Okay, so basically, what did I say? What did I say? Put it in the comment section. What did I say? How do we find these things? Okay. Alright, this is what I said. I said we wanna find a place where the market has touched at least more than once. Can you see it? Can you spot it? Can you spot anything right now, guys? It's not, nothing? Okay. Here's one point right here. As you can see, the market touched it once, twice, and the third time. And then the market right now is pushing to the downside. We want to find another one. Let's find another one. Where's the other one? Come on, guys, give me something here. Another point that you guys can see right now. Nothing. I see one right there. The market touched there, the market touched there, the market touched there. So as you can see, guys, it's really basic, it's really simple, it's really straightforward. And yeah, if it's still confusing after this video, guys, like, hit me up. Just write in the comment section or something. I'm gonna leave my email. Hit me up on the email, thepipmagnet@gmail.com, and I'm gonna help you understand it more better, how to trade using both support and resistance. But basically what you want to do is you want to actually start from a higher time frame, like the daily time frame. You want to scale down. So this is your higher time frame, right? So I'm going to give you an example with here. Let's say this is not there and we're here. So you want to scale down, you want to go to your scale up to your higher time frame, then from a higher time frame you're scaling down. So as you can see here, we're on the daily time frame. Let's say this hasn't happened yet, and we're looking at this point right here. The market touched this point here and the market touched that point here. We then scale down. We see, okay, the market touched this point, touched that point. Then we draw our line right here saying that, okay, this is our support because the market has touched it twice, right? And then with that being said, we then go down to our, let's say, our 4-hour time frame. We get like a better view, and then we can actually adjust the resistance to our liking. So this is our resistance, so if you want to adjust it to the close of the candle and leave the wicks, because if you go to a higher time frame, these are all wicks, like, it's not really bodies, it's wicks. So anyway, we can adjust it like that, so we have like a better view. So what we then do is, okay, we're sitting touching here, what did that illustration say? It said that the ceiling, when the ball hits the ceiling. So this is the ball, this is price, which is the ball, and that's the ceiling. So price is the ceiling right there. So what you can do, as soon as you see the price hitting your ceiling, you can then enter your trade. So you can enter your sell, and right after entering your sell, you just want to put your stop loss right above the highest wick at the moment. So for example, if we were here right now and then we've seen this happening, wait for this next candle to close. After it closes, we put our sell order, and then we put our stop loss right above the wick. So let me see if I can show you guys, make it so it makes more sense. So we take our sell right there, we put our TP wherever we want to put our TP. But usually, like, what I like to tell people is, like, just look at the history, so it gives you kind of like perspective on where you can put your TP. So as you can see right here, on this swing low, that swing low, that swing low. So let's say we're putting our TP on this swing low over here, and then we put our stop loss just right above that previous wick right there. Actually, that's a little too close, but like that. And then look at that risk to reward ratio. Just like that, you put your stop loss right there, and you just wait for the trade to unfold. And as you can see, the trade unfolded properly, boom, and then it hit your TP, and that's it. You just made money. You can do that. I mean, you can back test this over and over again. You can do that again here. As you can see, we can just bring this right here, because you could have done the same thing right here. When as soon as you see this candle closing in the red, that one right there closing, you could have entered your sell right there. You could have entered your sell, put your stop loss just above the wick, and then you put your TP at the swing lows. You use the swing lows because, like, this is almost like a reversal trade. So you want to target your previous places in the market where, like, the market rejected. This is like here, for example. And then as you can see there, you just made your money. You just entered your sell, you made your money. So basically, that's just how it is. It's very simple, it's very easy. I'm going to do more in-depth videos with actual strategies where I'm going to be focusing on the strategy itself. Right now, just focusing on actually teaching you guys what support and resistance is, and I hope you learned something out of this. And if you did, don't forget to hit that subscribe button, don't forget to hit the like button, share the video, share the stuff so we can share the knowledge to the people, share the knowledge to the world. I hope your trading journey becomes an awesome one with the Pip Magnet. Yeah, and again, like I said, don't forget to subscribe, like, comment, and share. Don't forget to subscribe, guys. Hope you guys enjoyed this one. I enjoyed making this video for you guys because I just wanted to give value out there. But yeah, hope you have a blessed one, have a great one, and